Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of a trading signal service that we provide here. If you would like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website www.dailymarketmovements.com. The website link is below this video in the description. Once on the website, you'll see that we charge a very small fee of $199 for a year's membership. So in front of me is the gold over the US dollar chart, and as you can see today, we have sold off rather significantly. We currently find ourselves trading at 16.95. We traded all the way down from that $17.28 level today. So, you know, nearly 30 points to the downside. A lot of traders right now are panicking. You know, I've got a lot of people on my signal team who are worrying, saying, "Oh my God, Max, is this going to be a trend changer?" Do not worry. This is perfectly normal. It makes perfect sense from a technical perspective, and from a fundamental perspective, gold is more bullish than ever before. So I am not worried at all. I see this as a perfect opportunity right now. This is great value in the gold market to play some long trades and trade back towards the resistance there of 1740, where we have struggled to break above on 4 separate occasions now, as I'm circling on the chart now. So right now is a perfect opportunity to add to your longs, and in the next couple of days or maybe a week or two, we will then retarget that 1740 area. Why have we sold off today? We had the ADP numbers in, the private payrolls, and Wall Street was expecting a loss of around 9 million jobs. However, there was only a loss of 2.7 million jobs. Not quite sure what went on here. The estimates were absurd, basically. The fact that it's been such a big miss is why we have seen such a big fall in gold today. The problem is now is the non-farm payroll. I will not lie, that could be an obstacle for gold, because if the ADP missed that much, then God help us with the non-farm payroll, because if that's a big miss, if it's anything like the private roll job number, then we could be in for some trouble. But I would look to buy the market around about now, as I do expect hedge funds and banks to step back into the market, and retail traders, and we should trade back above that 1700 area. Look where we get a daily close. If we get a daily close back above 1700, this is a very good bullish sign. But I would definitely look for us to, you know, trade back towards the upside around that 1720 area. And if we do find ourselves trading there by Friday, you can just put a stop loss at break even. So for the non-farm payroll trade, it will be pretty much risk-free. In terms of the RSI, we're currently at 44, so we're pretty much bang on in the middle. So we have plenty of territory to move to the upside, plenty of territory to the downside. If we did happen to get a daily close below the 50-day EMA, which is offering a great amount of support right now below this ascending triangle, then that changes things. You know, we could potentially find some support around that 1675 area, where on 2 separate occasions in the past we have found some support within the ascending triangle. But if we break below there, then we could find ourselves trading back towards that 1600 level, back to the 200-day EMA, which would be around at 1580 level. So that could be a bit of a game changer. But like I said, I do favour the upside in gold, and short term and long term, I am bullish. You know, in the weeks to come, look for us to trade back to 1740. If we break above 1740, as I mentioned, we can then target the highs of 2 weeks ago at 1764. And if we can break above there, 1800 is where we will most likely target, which is the 8-year highs back in 2012.